Well, the European Central Bank says it plans to create a new tool to tackle the risk of fragmentation in the eurozone. It surprised the markets with an emergency meeting to discuss the higher borrowing costs for European countries after bond yields surged. Now, investors are concerned after the ECB set the stage for aggressive tightening without new measures to support highly indebted countries in the region. It raises the specter of the so-called pigs crisis a decade ago that nearly brought down the euro. And for more, Rosie Burchett joins us live from Brussels. Rosie, some breaking news emerging from the ECB. Any more details on that new tool?
Indeed, breaking news, and it was also very much an unexpected meeting in the first place. The last time the European Central Bank held a similar unscheduled meeting in that format was back in 2020 in the aftermath of the pandemic, waving through Europe back in March 2020. Now, the European Central Bank says it's devising a new instrument to try and stop fragmentation within the eurozone. That's those 19 countries which use the euro currency, and that it's also going to be skewing reinvestments of maturing debt due in its pandemic recovery scheme, often known as PEP. Now, the backdrop of this, around a week ago, the European Central Bank announced that at its July meeting, it would be raising interest rates by 25 basis points. That will be the first interest rate increase by the ECB in more than a decade, and it also comes as we expect more interest rate increases to be announced by the Federal Reserve in the US. Now, there was some criticism after that ECB meeting last week, at which there was the announcement of that planned interest rate increase, that there was little detail given on how the ECB planned to help when it came to highly indebted countries within the eurozone, for example, Italy, Greece, or Spain. But now the ECB has come up with this new proposal, with these new plans. It says it wants to apply flexibility in reinvesting redemptions coming due in its pandemic support scheme.
Well, Rosie, what else then does it say about the ECB's anti-fragmentation policy as it tries to avoid a repeat of the pigs crisis?
Indeed, the fear here, the spectre here, is a repeat of that crisis, and markets have been hammered over the past few weeks, months indeed, by costs of borrowing for governments really soaring in several European countries. And in fact, the fear gauge, which is the difference between bond yields from Italy and Germany, has risen to the highest level since early 2020, just today. So there were certainly worries around inflation really hammering these markets. Now, we've heard, however, from French Finance Minister Bruno Le Maire before this announcement, saying he wanted to make sure that the measures the ECB was looking into were not brutal. He wanted to argue for a more progressive approach. He said that any kind of uncertainty could lead to more problems for economic actors. Well, we haven't had a reaction from him yet. That was rather a pre-reaction when he heard this ECB meeting was taking place. But we're due to hear more from ECB Chief Christine Lagarde in the coming hours. She's due to speak at a policy event.
Well, thanks for speaking with us, Rosie Burchett, there in Brussels.